Folks, welcome to Best Stock Charts for the new trading week. Bob Desmond here over at the Contrarian Trader, and we have some stocks that we are interested in trading this coming week. We'll talk about the charts. What I want to talk about most importantly, though, is when setups fail. And what I mean by that is that you're looking at a chart, you see this great setup. It really should. The stock or ETF, whatever you're trading, should move up higher, but it doesn't. It fails. It goes the opposite direction. And if it's a stock in and of itself that does that, well, you want to avoid the stock, obviously, because something went wrong there. But in this case, the only reason why I'm talking about it today is I saw quite a few of these setups fail this past week. In fact, on Thursday, I took a look at a few charts that were requested of me to take a look at by members. If you're not currently a member, 14-day free trial offer, link below. One of them was AAL, American Airlines. You're looking at the chart right here, right now. And at that time, I spoke fairly positively about the chart because we were flirting, this is a weekly chart, we were flirting with a breakout on a weekly time frame. I did encourage that you wait for a breakout above 1455 or so before you got excessively long. But in one trading day, we gave up all the week's gains. Here's the daily chart. We gave up all the week's gains, but we did close at the lower band of support. I would avoid this stock. And this is not the only one that's out there. Another chart that we took a look at, I took a look at, was SATS. This was requested by, Wendy requested American Airlines. Donnie requested SATS. Now, SATS, weekly chart, it looked as though on Thursday night we were going to break out. And we got rejected at that resistance level. So a couple of lessons here to be learned. One, if you're waiting for a breakout on a weekly chart, try to wait until Friday afternoon before you pull the trigger on that trade. Why? Because it could look great on Thursday night, meaning it's above its breakout point. All systems look ready to fire off. The stock is going to the moon. But then by the end of business on Friday, you're sitting with this situation where you didn't have a breakout. And in fact, you bought above a resistance level, which is a big no-no. So what I would do here is do one of two things. A, I would watch for a gap up above this support or resistance level now. And I would wait until Friday to see whether or not we close there. And if we get a gap down, then you just want to take it off your watch list. If you want to sell puts, meaning sell premium, it's actually a bullish bet. If some people hear puts, they think, oh, he's bearish. No, when you sell them, you're bullish because you're taking the opposite end of the trade from put buyers. They're betting the stock is going to go down. It's just a cash flow strategy that we use here. So that is a option, pardon the pun, that you could take. Otherwise, if you're looking to get long of the common stock, I would just simply play it safe. Wait for the breakout or wait for a retracement down to this dashed line here, which is a monthly support level. And you may be saying, wait a minute, Bob, you're looking at a weekly chart. How do you know there's monthly support below? Because with TrendSpider, link below, 35% discount code, you can be on a weekly chart. You can overlay onto that weekly chart monthly support and resistance levels. So we're looking at support at around 14 bucks a share. So if we don't gap up on Monday, Tuesday, I would be looking for a retracement back down to that $14 per share mark. Going back to AAL for Wendy for a moment, since I spent so much time talking about SATs, let's take a look at AAL. And this is a stock that I am very concerned about, where it looked bullish on Thursday. It now looks extremely bearish. Why? Well, on Thursday night, we were up on the week. But by the end of business on Friday, not only had we pulled back, but we were now negative on the week, and we are down below monthly support. How do we know that? Because we're using TrendSpider's automated trend lines right here. Monthly chart on top of a weekly chart, link below, 35% discount code. This is a tool that you must have in your toolbox. So what I'd be looking for here on AAL, and I would love to say get long of it, I can't. I think that what you're looking at is if they move it lower on Monday, they may rally it back, but they're going to try to fight to get it back above $13.25 per share. We know there's resistance there. In all probability, that's going to fail, and it's going to move lower. Because when you see a really good setup and all of a sudden that setup falls apart and you not only turn red, but break down below support levels, that's the market saying there's something very, very wrong here with this sector, with this stock, perhaps even with the entire stock market. And take a look at the volume last week. Very, very heavy selling pressure on AAL. This is not mom and pop selling 100 shares of AAL. This is the market. These are the institutions out there selling big, big blocks of shares, and you don't want to fight them. So I just wanted to touch base on these two stocks alone, where we saw great setups on Thursday. Those setups failed on Friday. That's a tell. That tells me that there's something wrong with the mid to large cap stock arena. So AAL, please avoid it right now. We'll revisit some point in time in the future. Okay. Stocks that we like going into the new trading week. One of them was on our watch list last week, and that was JP Morgan. And it's the only one on our watch list that we traded because the other ones just didn't do what we wanted them to do. The setups just fell apart. So JP Morgan, I had warned that we were short of it actually at the time, I believe. Yeah, we were. And we booked profits on that short early on in the week before earnings. Then we re-shorted it after earnings, and we scalped a quick profit on it because I wanted to see how we would close on the day. Because initially after earnings, let's go to the 15-minute chart. Initially, JP Morgan had rallied strong up and into resistance. This is where we got short, and we just scalped the profit and said, you know what, let's see whether or not this thing falls apart or whether or not it recovers. It did not recover. So on a weekly view, the shares of JP Morgan look like a train wreck. So on any rally next week, if we do get a rally on JP Morgan, we're going to be looking to open up a short position. The options are fairly cheap here. So the recipe of choice, the instrument of choice is going to be a put spread, meaning I would buy a deep in the money put, and I would simultaneously sell a deep out of the money put. That helps finance the trade. So yeah, you're capping your max profit. The however is that you're not putting up as much capital on the trade. And if you're wrong, well, you're having a little bit of an insurance policy on that trade, and that could help pay for the trade in terms of time decay. So JP Morgan definitely looking like a short. Another name I like, and I spent a lot of time on it last week, and that was Boeing. Boeing was decimated, and I warned it would be, was decimated over the past week. And I went into the week with an options position on it. It was a butterfly. Actually, no, I'm sorry. It wasn't a butterfly. It was an iron condor. So we were able to trade out of this position and ultimately close down maybe $200 on the trade. So, we could have seen a much bigger loss had I not been able to short the stock in the pre-market on Monday, and then we got long of it intraday on Monday as it hit oversold conditions. And on that rally, we booked another round of profits, and we turned what would be a moderate-sized loss into a very, very small loss. So in essence, we just scratched the trade. But Boeing, I like it from the long side here, because what you're looking at on a weekly time frame is that we are probing support levels at around 218. I believe that we closed down below that mark. Yeah, we did at 217.70. I think what we're going to do is we're going to come down, we're going to retest the 20-period moving average here, actually the 21-period moving average, that's the EMA, and we'll probably see a bounce off of that mark. So we're going to be looking to buy Boeing this coming week and trade the stock to the long side. I am not going to carry it for any length of time. Earnings are coming out, I believe, at the last week of January, so I do not want to be long. Let's validate that. Yeah, so according to IBD, they are going to be releasing earnings on the 31st of January, so I will not be long of the stock into earnings. In fact, I'll have no position on the stock into earnings. After earnings, different story. Maybe we'll trade it to the long side, short side, whatever the market tells us to do, we'll do it. So That is Boeing for a new setup going into the new trading week. I think it is going to bounce, and we will get long of it. Members, I'll be talking more about this. And in fact, members, I posted the weekend commentary. That's our strategy session for the new trading week in the members area. Go check it out. I also sent it out to your inbox if you're watching this on your phone. Now, the next stock we're looking at is CYBR. Now, CYBR hit a new 52-week high last week. Now, at some point in time, I'm going to be shorting CYBR, but not right now. The path of least resistance remains to the upside. We pull back, we hit support, they break it out. Can't fight that. That's crazy talk. So what I plan on doing with CYBR is that I plan on opening up what you call a iron condor. So that's a simultaneous sale of a deep out of the money put and a call, same delta, meaning if the option trades with a 10 delta, that means that it moves 10 cents for every dollar that the stock does. So we want to be very, very conservative here. Simultaneously, what we want to do is we want to buy a deeper out of the money call and a put, and that way we're able to put on a little bit of an insurance policy just in case the trade goes against us. So I think that's exactly what we did with Boeing, and that insurance policy paid off and paid off big on Monday. So that's what I plan to do here on CYBR, because I do believe it's going to move up higher, but I also believe that at some point in time, this is going to go into an exhaustion run, and we do have resistance levels above. You can see it right here. I think that we'll probably break through it at 231.57 because the chart looks just so bullish, and you still have good institutional accumulation and really not much in terms of overhead supply above, with the exception of the fact that you have extrapolated out from prior peaks this upper band of resistance. If we break out and above this, well, you're not going to want to be net short of this stock. You're going to want to have some hedges on. So that's what I would do with CYBR. And it may seem complicated when I'm talking about using an iron condor or whatnot. It's really actually pretty simple. So if you join, you want to join up with a 14-day free trial offer, I'll walk you through how to set it up. More than happy to. We have a Slack forum. We have a lot of conversations in there, and we could certainly go over how to set up an iron condor. And if you're a member and you're wondering that, just tap me on the shoulder over in the Slack forum, and I'll walk you through it. No problem. So that is CYBR. We like going into the new trading week. If we do, in fact, break out, suppose they gap it up on Monday above this upper band of resistance, and we get a retest on Tuesday of what was resistance should then be support, I may just buy the shares outright and use a trailing stop loss and allow the stock market to take me out of whenever the stock decides to go into a correction. But right now, the stock looks as though it wants to go higher. I'm very, very bullish on it. And that is it for this week, folks. Don't forget, join us Sunday Night Futures Live, 6 p.m. Eastern Standard Time. And if you want to know what my top 5 favorite candlestick patterns are, I have a link below giving you a 5-part video tutorial of my top 5 favorite candlestick patterns. It's free of charge, and you'll also get notified when we go live about half hour, 45 minutes before we go live on Sundays and Thursday nights. And that goes out to everybody, not just members. Don't forget, members, that we have the week ahead commentary in the members area, and we'll be talking about these charts in the coming days. I will talk to you soon. Have an awesome weekend. Be well. Oh, and by the way, I just realized something. I've been saying Monday. The market is closed on Monday. So Tuesday, not Monday. Everybody have an awesome remainder of your weekend. Happy Martin Luther King Day. I'm a big fan of his. Be well.